This week we're going to highlight some deterioration in U.S. national crop condition ratings for soybeans. We're also going to highlight critical weather trends here as we move through the pod set and pod fill stage for beans. And we're going to wrap things up by looking at some trends in declining soybean crushing in China. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We moved into the latter half of August here, and this market remains extremely unpredictable. What we want to do this week is start out looking at the latest updates from the USDA on crop condition ratings. And as usual here, our map shows different color codes. The red circles imply deterioration in good to excellent conditions for beans. The green circles imply improvement, and the yellow circles imply unchanged. We're looking at nationwide a decline in good to excellent ratings of 3 percentage points from 60 to 57%. Notice that's also 15% below last year at this time, which was 72%. Again, most of the crop condition deterioration occurred west of the Mississippi. We did see some improvement, modest improvement in North Dakota as well as in Kansas. Let's take a step back now that we've looked at crop condition ratings and look at soybean yields. This is the chart from the USDA's last week's supply-demand report. What the USDA forecast here in the green circle was record yields for Illinois, Indiana, and Ohio. That's depicted by the hashtag next to the yield. For example, in Illinois, 64 bushel statewide yield would be a record. Notice that's in stark contrast, however, to what the USDA forecasted up in the Northwest and Northern Plains. Look at Minnesota, North Dakota, South Dakota, all significantly down from a year ago. That's a percentage change. For example, North Dakota down 28.4%. Looking now nationally at our soybean crop condition index, we started out the crop year back in early June at about 3.7 on that index. It is now at a season low of 3.50. We're looking at crop progress now with soybeans setting pods. The last 2 weeks in August, we typically see about the last 10 to 15% of the soybeans in the U.S. setting pods. So by the end of the month here, we should be around 95% of the beans setting pods. That does imply that weather is still critical here as the month of August proceeds, and I would extend that all the way into the first half of September. Speaking of weather, let's look at the short-term weather trends this week, courtesy of T-Storm Weather. We're starting out here looking at the next 5 to 7 days rainfall-wise. It looks like it's going to start out in the southeast. Some of that is a function of the remnants of Tropical Storm Fred as it moves north and east. Now we're looking at Friday through Monday. More over that drier area that we just highlighted in the yield projections. This will be critical. Looking at that eastern section of North Dakota, eastern section of South Dakota, as well as portions of Minnesota are forecast to get the heaviest rainfall amounts. We're also looking at more rainfall amounts south of that area, but more dry in the eastern areas. Now let's look into next week, August 25th to the 26th. That rainfall does migrate south and east, if you will, across Illinois and into parts of that eastern corn belt. Let's move on now and highlight soybean demand. What we want to do is specifically look at the trends in the soybean crush in China. And what you'll see here is that soybean crush in China has slowed quite a bit here. And it is now well below the level seen in 2020. Why is that important? China is the largest importer of U.S. soybeans by far in the world. So it does raise some questions about Chinese soybean imports for the 21-22 crop year, which will begin on September 1st. We're going to wrap things up this week looking at trends in November soybean futures. We continue to look at this chart all throughout the calendar year here. We are looking at the highest price for November soybean futures for this time of year, mid-August, in 9 years. You have to go all the way back to 2012. So again, we strongly encourage you to work closely with your trusted risk management advisor to manage these price movements. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'd be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an upload. Thanks a lot. Have a good week.